Joining me now to discuss BTC news and price is our Week in Review panel with CoinDesk research analyst George Kaludis and managing editor of Markets, Brad Cohn. Hello there, Brad and George.
How's it going?
It's going good.
I love your background.
All right.
Sunny Florida.
I like the weather here. I can't deny, it's getting a little chilly in New York. All right. So, Brad, taking a look at the markets, looking a little chilly in the markets as well.
Nice one, Christine. It's just been the past couple hours, Bitcoin has really ticked down, not a small amount, probably a couple $1,000, just from when I was looking at prices a little while ago. And this takes us back to where we were kind of at the end of Friday, which is last Friday, Black Friday, but some people called it Red Friday for Bitcoin, because we had that big sell-off related to the reports of the Omicron variant. So, we had a big kind of a rebound over the last weekend, and we the price kind of went back up in the $58,000 zone. And today we had this jobs report from the Fed, from the Labor Department on November jobs, and it was quite a bit softer than people were looking for, about 210,000 versus 550,000 was the expectation. And a lot of questions about that report, the data, or, people talking about misreport or undercounting or seasonality, but people just sort of jumping to the dual conclusion that maybe this means the economy's a little softer than we thought, or companies aren't able to find the employees they need, or also it might mean, I don't think this report really changes the expectations that the Fed is going to reduce its or accelerate its rate of tapering. So basically, expectations are still on for more removal of monetary accommodation, and all things being equal, that's probably a negative for Bitcoin.
George, what are your thoughts on the economy? And how about $100,000 per Bitcoin? Are those hopes dashed?
Yeah, it seemed like 2021 was going to be the year where we're definitely going to hit $100,000 per Bitcoin. We entered November with a lot of bullish sentiment, and then all of a sudden we get into Thanksgiving and we kind of went a lot of red, and it pales in comparison to what happened last year. Last December, we gained 50% in Bitcoin's price after gaining 40% in November 2020. And that environment felt very different. That was a time where the institutional adoption narrative was picking up a lot of steam. I distinctly remember being in full Christmas time mode when MassMutual bought $100 million of Bitcoin for its general investment account. And at that time, it was a really big deal. CoinDesk wrote an article about it and made it a headline. Since then, it seems like the headline obsession has faded away. Perhaps that means that institutional interest has died down. But I actually would bring up a point that one thing I really want to draw attention to is Bitcoin's correlation to equities. Typically, Bitcoin is not displayed sustained positive or negative correlation to equity. But as the investor mix has moved increasingly towards institutional holders, which is what we believe, Bitcoin has been sort of more positively correlated. Now I say positively correlated. It's not like it's one-to-one, but it is more than it was previously. So there is a feeling that their institutional buyers are holding Bitcoin in the same way they hold equities and treating them as equity. So whenever they get into a risk off or risk on environment, they're going to sell them or buy them in lockstep. So all that to say is it feels as if the 100K Bitcoin is out of reach, but as a long-term permeable, we'll get there eventually, I think.
All our laser-eyed meme folks are pretty disappointed by that. Moving on to ETFs, Brad, Fidelity went to Canada to launch a spot Bitcoin ETF, circumventing the United States. Meanwhile, the SEC, Securities Exchange Commission, has just recently rejected WisdomTree's spot Bitcoin ETF proposal. What does this all say about the ETF circumstances we find ourselves in the United States?
Well, it was just a couple months ago, or I guess actually, October, where we had all those Bitcoin futures ETFs launch, and that was seen as kind of a bullish milestone. Just the fact that we had anything in the U.S. that was kind of Bitcoin ETF, even if it was a Bitcoin futures ETF, and a lot of these applications in the U.S. for Bitcoin spot ETFs, and kind of Gary Gensler, the SEC chair, had said earlier this year that he probably was unlikely to approve these, and sure enough, they rejected the Van Eck spot Bitcoin ETF proposal last month, and then the Wisdom Tree one now. But yeah, that's been a big story, Christine. There's been lots of these ETFs listing in Canada, in Switzerland. If you're a U.S., it kind of depends on who you are, once again, and how you're set up. And, all these big U.S. hedge funds and asset managers, they have offshore affiliates wherever. They can trade via some of these foreign vehicles, but for a lot of investors, that they're not set up like that to trade in Canada or Switzerland or whatever. So. It's probably not the hugest deal in the market, but it's just another sign of how the U.S. is just holding the line on these spot Bitcoin ETFs. They're just not going there.
And yet, innovators are itching, raring to go, and we see that with Facebook turned Meta. We see that with Square turned Block. And that's another big story of the week. Just seeing a lot of these Web 2.0 incumbents transitioning into Web 3.0. And we've seen that with Jack Dorsey resigning from Twitter, focusing his attention on Square. And one of the first announcements released out of the gate is that they are renaming Square to Block, which sounds a lot like blockchain, a network of blocks. And this is while he has already mentioned that he is interested in Bitcoin mining, creating a crypto wallet, as well as building a decentralized exchange focused on Bitcoin. So, George, when you heard about this, what were your thoughts about all the news with Meta as well as Square and Block, as they call themselves now?
Yeah, when it comes to comparing what Meta did versus what Block did, so Jack Dorsey versus Mark Zuckerberg, they felt very different. Meta's and Facebook's felt like a grasp at trying to get back to being relevant and like, ooh, we're going to give you the metaverse. We're going to give you something new. For Jack Dorsey and him leaving Twitter and changing Square into Block and changing the name of Square Crypto into Spiral to focus specifically on Bitcoin, it felt like a long time coming, right? We saw Jack Dorsey earlier this year go to Bitcoin 2021 in Miami and say that if he wasn't working on Square or on Twitter, he'd be working on Bitcoin. And it was really a long time coming. And the fact that he stepped down from Twitter and then next day we found out that they were going to do Block or rename Square into Block and just keep pushing forward these Bitcoin related ideas, it comes as no surprise to me. And it's about time that it's happened for him. I'm really excited to see the things that he's working on. They announced TBD, which is, again, TBD. They wrote a white paper that is very exciting in the words it's written, but it seems almost impossible to launch a decentralized DEX with reputation. There's a lot of stuff in there, but they are working towards building something versus, the Facebook ideas feels more of a grab at attention again versus Jack, building Bitcoin.
Let's take a look at next week. So, Brad, taking a look at the markets, we see Bitcoin in this very narrow trading range. Do you see a breakout either up or down? What will be the catalysts behind it? Also, the Fed's last monetary policy meeting of the year is in 2 weeks. So maybe you could give us a preview for that.
Yeah, regarding the price range, it looks like we're kind of definitely in this new range between, say, call it $52,000 and $60,000, and kind of moving around in that range. And at least that's been what it looks like for the past week or two. Even that Red Friday scare sell-off we had last week took us down to about where we are right now. And I think that's kind of what the analysts are seeing is sort of a tug of war right now. There's no clear driver for prices to go higher, nothing super bearish either, and I think kind of with, as George was talking about, the correlations, and that is absolutely seems to be a factor, is we're again kind of seeing Bitcoin trading a lot like stocks. And I think, a lot of the news is priced in, even this Fed's plan to taper. I mean, Powell basically came out and said it during the congressional testimony this week, that that's what they're going to do. And, people aren't seeing even the jobs report didn't change anything there. So, that's probably what the Fed's going to do. But it'll be seen whether they were able to get away with it. They have in the past, in 2018, they were pretty dead set against raising interest rates. And then all of a sudden the markets just couldn't take it in December of 2018, and they cut off the dogs, and then they were cutting all the way through 2019. So that's going to be the big question, is like, now that kind of what they're doing is a little bit priced in, and Powell, retreated on his describing inflation as transitory, i.e. even Jerome Powell's now saying inflation is here to stay, so, but they've set a course for what they're going to do. But economic conditions have never been more uncertain than they are right now.